If you're watching this video, that means I've just closed on another 12-plex large multifamily apartment building, bringing my unit count up to 263 units. Hey guys, Jeff Wybo here, and don't worry, that's not the best part about this. The best part is I'm gonna teach you how I did this in exchange for you guys just hitting the like button on this video. So you have to go back all the way 4 months ago when I got the property under contract. The funds were not ready on time and we had to push the closing date, but the seller said, okay, put down more money, non-refundable, as a deposit, and I'll push the closing date out. So that was what we wanted to do, and since this deal was a no-brainer for us, we did it. Thankfully, during this time, the market continued to appreciate and other 12-plexes in the city began selling for $2.1 million. Now, historically in my region, in multifamily, it just continues to rise and never really has like a sharp decline. The 12-plex that I was looking at about 4 months ago was listed around $1.8 million, but the rent roll was not very good. Now, another buyer had actually beat me to the deal, and he got the property under contract for $1.7 million, I'm thinking. From what I gather, they had a lot of financing conditions attached to this deal. They were likely trying to bring the deal to the big banks, but since the rent roll wasn't very good, I knew the banks would probably not fund the deal. This is usually the rookie mistake that most investors do. Nobody's gonna sell you one of these properties on day one where it's cash flowing, or else it's extremely rare that they're gonna do it. One of my favorite things to do on any deal, if I don't get it, is to put in a backup offer. And I contacted the listing agent and said, can you do $1.6 million with no conditions? Backup offer, knowing that this is the price I would like to purchase the property at based on my math. So the weeks went by, and I kept bugging the agent saying, like, how's it going? Are they gonna firm up? And it sounds like they were having trouble with financing, of course. And I kept egging him on to take my offer. From what I gathered, the seller really didn't need all the money in the world. They just wanted it sold and wanted it sold quick. So that's why I thought my firm deal of $200,000 under the actual asking price was gonna be a clean deal for them to take. And sure enough, the other offer was not successful, and they were about to mutual release when my deal got activated. I never actually went to the property until a few months actually later when the appraiser had to go, and he actually had a tough time getting it to the $1.6 million mark, so you can imagine how they couldn't fund the deal at the 1.7. This is because the rent roll was not very high again. Normally, I don't buy properties that are already working properly, or else there's no meat on the bone for myself. I like to do the BUR method, which is buy, renovate, rent, refinance, repeat. Now, since putting in my offer on this 12-plex, other 12-plexes in my city have begun selling for $2.1 million, probably with better rent roll. Now I know I have this equity built into this deal now. Normally, you have to renovate, force appreciation, get the rents up, but sometimes you can get lucky with the market, and with other properties going up in value, you're able to compare off them. It's called a comp. So since the other properties are now selling for 2.1, well, at least one was, I basically have a $500,000 spread minus, let's say, some fees, and around $440,000 of built-in equity into this deal. And I didn't even have to renovate yet. That's pretty sweet to know that you get $444,000 right off the hop because of the buy. Making money off the buy is the most important thing you can do as a real estate investor. You never want to overpay, or you'll be chasing that cash flow for a long time. I could sell it right now based off that other comp and just keep pointing at that comp, and somebody would eventually pay me close to that $2 million because of it. Now, how do I finance all these deals? I know that's a huge question that many of you have. I don't take it to the big banks because clearly that doesn't work. So since we are BURring the property, you just want to get the property into your name regardless of the interest rates and fees. We take the deal to a private mortgage and have to pay 10% interest rates plus lender fees, plus have to put down 10%. This might seem insane to you, but I'm not keeping the property the way it's operating forever. I'll just spend the next year getting the rent roll up any which way I can, and at the end of the term of this mortgage, I'll shop around the new rent roll along with comps to get more favorable financing. From all the other videos on this channel, this is 90% of how I'm funding the deals. I rinse and repeat this model. I would only suggest doing this if you're 100% sure of your numbers and your ability, or else this interest rate will crush you long term. For more information, make sure to check out my partners, Mitt and Pearson. You can subscribe to their channels here on YouTube. And as always, guys, if you are new here, make sure you guys subscribe to the channel and you hit the like button. And if you're into stocks and crypto, make sure you guys check out my affiliate links down below in the description for Wealthsimple and ShakePay. And if you are a real estate agent, check out my free course offered here on YouTube, where I teach strategies on how to make $100,000 in your first year being a real estate agent. And as always, guys, I will see you on my next video. Bye.